Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, well, the S&P and the Qs unfortunately closing lower, but the highlight of the day was the equal weighted S&P. Most of your major market sectors actually ended in the green. However, technology names continued to be a bit of a drag on the market. That was during the regular session, but you'll notice here in the post-market or after hours, well, we have some very nice gains, and that was after this headline right here, with Witkoff and Kushner working on ceasefire mechanisms. This was reported by an Israeli newspaper saying there was a 15-point plan for terms of a ceasefire, something that President Trump did hint at yesterday morning, which was the reason that we got such a massive move yesterday in the pre-market hours, which led to a lot of yesterday's gains. So, is this possibly more signs that we are approaching local lows in the markets and ready for a big bounce? Or is it once again just a question of fake news? Well, obviously, we're going to get into that today and derive any potential positions that we can establish as a result of these effects. And in today's video, number one, we'll go through the news headlines of the day, talking about this ceasefire or tentative ceasefire arrangement. Nothing concrete has yet been inked down. And thereafter, guys, we'll get into some statistics of the market and some other big tech news that we had today. After that, we will get into our technical analysis of the S&P, the Qs, and most of our minor sectors. Check on the index rotation and where we could possibly find some good rotation deals. After that, we're going to take a look at our big tech names, a lot of which struggled over the course of the day today. However, getting a little bit of a bump in the after hours. So we'll go through these individually and once again derive which of these names are good for swing trades or long-term investments for our portfolios. And at the very end of the video, of course, we'll do everybody's favorite section, the biggest gainers and losers of the day. There were some very big decliners today. We'll determine whether or not any of these are worth a buy. And then to the upside, some of the same players that we keep seeing over and over. There's always a bull market somewhere, and the photonics segment has been excessively strong lately. So we will derive once again whether or not some of these plays are indeed also decent for some trades and or for some longer term buys. That's going to be it for today's video. So let's get right into the action, shall we? The S&P down about 0.34, the Qs down 0.68%. And in terms of the heat map, it was actually not that bad. Most of the markets were dragged down by some weakness in big tech and software. And we'll explain why. Yes, as a matter of fact, it was another Claude Anthropic release that plunged software players down tremendously today, brought down Microsoft, Oracle, even Palantir suffered a little bit on that drawdown today. Google, Meta, Amazon, NVIDIA, Broadcom, Micron, not performing too well. So some of the biggest companies in the market, sadly, bringing the entire market down. However, the heat map wasn't too bad, guys. Decent market breadth today. Financials, not too bad of a day. Healthcare, not too bad of a day. And the bottom half of the market, also fairly decent. Shout out to a lot of industrial companies that did well today, and some of the oil and energy stocks still continuing their march higher. Moving on to the one-day relative, you'll see how mixed the market was today. Energy, materials, industrials, and utilities making their way higher, and to the downside, communication services, I'll remind you, which is largely Google, Meta, and Netflix as your largest components. They sadly were the biggest loss leader on your 1 week relative. Still very weak conditions in the market. As we know, we've been plunged in this very big and steep daily downtrend with high amounts of volatility. And as a result, only energy stocks, because obviously they benefit the most from these wartime conditions with these surges in the price of oil. Those are the only ones that have been higher, and the rest of the market continues to be down as investor sentiment is currently very, very soft right now. A lot of people are bearish in the market. So getting into our news headlines, right? Trying to reconcile this bearishness with some of the news headlines that we had today. So the news article that came out, guys, was this one right here. The US is seeking a 1-month ceasefire with Iran to hold peace talks per Israeli media. Here is the 15 clauses of the agreement, automatically canceling the threat of reimposition of sanctions, dismantling the nuclear capabilities, an agreement with Iran to never seek nuclear weapons, preventing the enrichment of any nuclear material on Iranian territory, delivery of enriched uranium to the international authorities, decommissioning and destroying the sites of Natanz, Isfahan, and Fordo. That's going to be tough to do. I don't know if they're going to do that. Grant international authorities on nuclear propositions, right? Full access to all information. Iran abandoning the proxies approach. As you know, they fund several things like Hezbollah, Hamas, and the Houthis in Yemen, stopping funding of arming of militias in the region, keeping the Strait of Hormuz open without any closures, postponement of decisions on ballistic missile programs. Ballistic missiles are to only be used for defense. You might think that this is a heavy ask for Iran, right? But look at this point right here. In turn, the United States would lift all sanctions on Iran. this would be a huge economic benefit to the country. So if you're wondering, how is Iran possibly going to reconcile getting rid of all this? It's this big one right here. They would have all sanctions lifted against the country. So possibly a fair trade-off there, supporting the development of a civilian nuclear program. This is what the US would help them with for civilian nuclear power, and then automatically cancel the threat of reimposition of sanctions. So there you have it. These are the terms that the US is coming to the table with. Some things that are being discussed on an ongoing basis right now, which once again corroborates what President Trump was saying yesterday, him delaying the attack on Iran's energy infrastructure by 5 days to kind of move forward with some of these initial arguments right here. And we will see if both parties are able to come to the table. Now, that being said, over the course of the session before this news, you can see that the sentiment in the market and a lot of your statistical analysis pieces are very soft, right? Extreme greed right now at a 14. Market momentum, extreme fear. Stock price strength, meaning net new 52 highs and lows, extreme fear territories as well. Stock price breadth, extreme fear conditions. We've been bringing this one up for a while, right? The percentage of stocks above their 20-day EMA, although they did have a nice little bump today at a very low print of 29. Usually when we're down here, guys, you guys know the rules, right? Is it a good time to be exploring some buying opportunities? Answer is usually yes. Percentage of stocks above their 50-day EMA, that's at a 28% read. Can it go lower? Sure. But is it a good time to be participating in the markets? I mean, if we look back over the past 15, 20 years, you would make the argument that indeed, yes. So fear and greed index, put and call option ratio, we've been through that already. So many people buying protection in the markets right now. Extreme fear territory there as well. So you are at a print of 14 on this index right here. Let's continue down some of our sentiment and statistical analysis, shall we? We've been bringing up a lot of this over the past week and a half as people are so bearish right now, but it's a very logical thing to be bearish right now, obviously, right? But it's a funny thing that happens in the markets after I've been doing this for almost 15 years, right? People always tend to get the most bearish in the markets when that's the consensus view, when the market already has all of this information. Do you guys not think that the market is able to price out the impacts, the long-lasting impacts of the prices of the barrel of oil, right? Do you think the market doesn't know that even though if the conflict ends tomorrow, it'll take a while to rehabilitate the supply chains? It always happens this way, guys. Just go back to the tariffs last April, right? Sure, there was the infamous reversal of the tariffs back from the very high percentage rates that they had over to 10, 15% on most countries. But the markets ripped thereafter. Why did the markets rip thereafter? Not because there was going to be no tariffs. No, nobody knew what the impact of the tariffs was going to be. There were going to be some negative impacts, but I'll remind you, right? If you would have sold in these conditions down here saying, oh, well, the lasting impact of the tariff is going to last for months. It's going to erode consumer pricing power. I'll just wait until all of the lasting impacts of the tariffs have been known and the damage has been done, right? Where would you possibly have gotten back in? Well, the answer is nowhere. It's the same thing for COVID, right? Another snap down in the markets, right? Now, obviously, near the bottom of the market, Jerome Powell turned on the money printer and cut rates to absolute zero. However, was the pandemic solved? No. At that moment in time, you still had no vaccine whatsoever. People were still getting locked down. Supply chains were still broken. However, the markets ripped, right? Because the markets are always forward-looking, guys. If you guys don't think that the market has priced in all the implications of this war and is currently still pricing them into this day, and if you're waiting for all of those implications to happen down the road and you're waiting to buy until then, you will always be too late, guys. Just go back in history, and that's just how it works. It's not my opinion. This is just how the market structure works. You may not agree with it, but that's up to you, right? Sounds to me like we have a bit of a investor sentiment problem right now. And this also corroborates this. Retail volumes have moved back to local lows. Take a look at the retail volumes now, guys. Nobody is participating, are they? However, everybody was participating at the peak of the market in October when things were ripping and the AI trade was in full swing. Yes, at the top of the market, you get the most amount of participation. Of course, after the markets have rallied consecutively for 8-9 months in a row, obviously that's when people feel a lot more comfortable buying in, right? But that's not when you get the best prices. Moving on to the AAPL Investor Sentiment Survey. We are now at a low print of 52% of all investors say they are bearish on the stock market for the next 6 months. I'll remind you, the peak of the tariff lows last year at this same time was 62%. You can see this creeping up every single week now for the past few weeks, right? From the 30s to the 40s, now into the 50s. So seemingly, once again, everybody in the crowded trade of being very bearish in the markets, because psychologically, there's a lot of things to be bearish about, but that's usually how these things work. And we will move through more indicators to prove to you guys that you got to reverse that psychology, right? Moving on further here, the daily trading sentiment composite as well. Now we are at extreme pessimism down here. Usually do these mark local market bottoms. It doesn't mean that today is the absolute bottom. It means that you're in a bottoming out process and you should be looking to buy now rather than sell and panic everything or panic sell everything, right? So keep that in mind in excessive pessimism reads right now. So extreme fear territories, AAII sentiment at the depths right now. 52% of people are bearish. Put to call ratios, everybody's buying puts, everybody's expecting the greatest market crash of all time, obviously, because the everlasting impacts of oil are obviously going to last for the next decade, aren't they, right? Obviously, I'm being hyperbolic here, but just I'm trying to paint a picture, right? Moving on, smart money, dumb money confidence. I've highlighted a few key elements on this chart to once again show you what the smart money does versus what the dumb money does in times of great uncertainty. You will notice back here in April, what were the institutions doing? February through March, they loaded up so much that they were just completely tapped on this chart, right? What was retail doing throughout the entire tariff situation? Oh, well, these are the worst tariffs in 100 years, and I guess it'll take multiple years to recover from this, and we're going to go into a massive recession, and retail just panic selling all of their stocks to who? To the institutions, and then when the markets recover and retail is late to buying the dip, as usual, what are the institutions doing? Well, obviously, they're offloading to them throughout the entire summer rally. And then the institutions are sitting on a ton of profits, being very calculated on how they redeploy their capital. Back here in the October and November scare that the markets had, I'll remind you, this is this one right here. We were calling out the problems with the market breadth at the top right here. And you had a nice 6-7% sell-off on some of your indexes. Well, what was the smart money doing? Well, obviously the smart money was loading the bag a little bit more. What did retail do? Well, obviously they started panic selling at the lows, getting rid of their positions in a very rapid fashion at the same speed that they did during the tariff sell-off of April of last year. And thereafter, what happened? Well, when retail started rebuying the dips and the market started going higher, what did the institutions do with this money that they loaded at the lows? Once again, they liquidated their bags to who? To retail, who continued to accumulate at the highs of the market. And now, once again, you find yourself in a situation, the current market right now, where what is retail doing? Well, obviously, they're getting rid of absolutely everything as they have no confidence in this market whatsoever. Everybody is a geopolitical strategist. Everybody is an oil specialist. Everybody is a specialist in the Middle East and the possible implications, conclusions, and especially timelines that people are expecting, right? Obviously, people probably know better than the overall market does and more than institutions do, quite obviously, right? Smart money right down here. What have they been doing during this entire February through March sell-off? Well, obviously, they have been loading, not quite full just yet, but buying a lot more aggressively than retail has been right now, which is why you see a pretty big divergence here between retail positioning and institutional positioning as well. Now, smart money versus dumb money. This doesn't necessarily mean that retail is dumb and that institutions are very smart. It just means that institutions usually look at the market with a longer duration view, and retail really gets trapped in the short duration headlines. Hopefully that is not you. Moving on to the further ones, S&P 500 price to earnings drawdowns are very rare, especially when you get 15% off of local highs. You'll notice every single time you're down here or very close, these tend to be bottoming out locations, at least in every single one of the prior events this has happened since 2016. So pay attention to that. We've been bringing up valuations a lot currently, how they're down tremendously off of their cycle highs, and now might be a decent proposition to buy some of your favorite companies as opposed to just watching them every single day, being very scared about the direction of the markets. Moving on further here. Now, we're going to get into some fun news this time around. So you guys know the statistics now. Put to call ratios, VIX, market breadth, institutional positioning versus retail positioning, fear and greed sentiment indexes, AAII sentiment indexes. I think I've been very good at providing you guys a lot of data over the past 2 weeks for you guys to make the conclusion. I'm not going to sit here and force you to buy the market. If you want to sit in cash and chill until we have index price action repair, until you find some daily uptrends to be recaptured in the market, or until one of our two conditions get solved in terms of either you establish a concrete ceasefire in the markets or until you see ships in the Strait of Hormuz, that is perfectly fine. But once again, you will be sacrificing price for certainty, meaning you may not get the absolute market lows, and as a result, you'll have to buy a little bit higher and possibly buy during a more trending market, which is perfectly fine. Sometimes a lot of people are better off sacrificing price for certainty, and there's nothing wrong with that whatsoever. But moving on to some fun news right now, right? Rather than the dramatic impacts of the market. Oh no, I have another one for you. Sorry. Magnificent 7 stocks are decoupling from the rest of the market. Take a look at this, guys. Massive inverse correlation, right? So Mag 7 stocks, the last time that this happened was 2023. And you guys know I've been putting a lot of emphasis on Mag 7 stocks. The price action on a lot of them, I'll be honest with you, is garbage right now. From Meta to Microsoft to even Google losing some of the highs, right? NVIDIA not moving anywhere in 9-10 months. Seeing a big decoupling. Does this usually last forever? No, they usually do return to being some of the best performers in the market. So on the other side of this conflict volatility, you would probably expect Mag 7 to be some of your best performers in the market. So keep that in mind. Talking about some good old mean reversion. And last but not least, got to show you this one at all times, right? S&P 500 around over 30 major geopolitical conflicts since 1939. Usually between weeks 2 and 3, that is when the market tends to find a temporary local bottom. This does not mean, such as in many other geopolitical events in history, right? It does not mean that the impacts of the conflicts are done. It just means that this is the average duration that the market takes to price in the worst order effects, right? So if the worst order effects are really bad, well, then you have really big drawdowns very quickly, right? And if the market deems them to be not that bad, you'll still get some drawdowns, but they won't be as magnified as some other times in history. This is just how the market pricing mechanism works. It's a forward-looking mechanism. It always prices in the absolute worst case scenarios upfront immediately, and then backtracks from there as we receive more positive data on the outlook of the situation. Now, I think we can't, oh my God, it's a bit more. Sorry about that. CNN Fear and Greed Index, we'll go through this quickly. Once again, down at the lows. Has it always been a good time to be buying down here? Yes, indeed it has. And I think I got one more for you or two more for you here. I've shown this chart every single day now for the past 5 days just to kind of drive the point home here. S&P 500 corrections because of XYZ narratives, guys, are very frequent in the market. Once per year, the media or whoever else you follow, right, will tell you to sell everything because this is it. This is the time, right? But if you're a long-term investor, you should probably never sell your long-term portfolio because of news headlines or anything that happens, whether it's any one of these major events in the markets since 2009. They've all been great buying opportunities. Some drawdowns may last more than others. Some drawdowns may be steeper than others. The biggest one, in my opinion, guys, because 2022 was the last actual bear market. You had the fastest rate hikes in history. You had the most inflation since the 1970s. That was an actual bear market. Even I was a net seller at the beginning of that bear market. We haven't had one of those in recent memory. The worst time, in my opinion, in the last 15 years across all these events was COVID. It was a global pandemic. Nobody knew what was happening. There was no vaccines, et cetera, right? Nobody knew what the contagion rate was, how much it would affect global trade, global supply chains, and everything like that, right? That was true peak uncertainty. The conflict in the Middle East right now, although unfortunate, and the impacts on the prices of oil, also very unfortunate. You can't compare this to COVID, guys. It's not even close. So that is just the price that you pay to be an investor in the markets. So take that one as you will. Now, moving on to some favorable headlines right now, brightening up the tone. Amazon making a big move in the robotics game following an acquisition here of Fauna. 50 employees will join the Amazon team. Cool little robot. This is the new company that Amazon has bought, right? Very nice stuff. So Amazon, once again, going to have, Amazon's a big player in industrial robotics because of their warehouses and whatnot. But there you go. They're acquiring a company that makes these cute little humanoid robots, right? So that's going to be very fun to pay attention to in the near-term future. Amazon, once again, just such a broad company, an octopus of sorts, right? They have their hands everywhere. Moving on a little bit further here. This one will go over. But this one here, NASA. This is some really nice news as well. NASA investing $20 billion over the next 7 years to build what? They're building a moon base, guys. We're finally going to the moon for the very first time. Well, I'll let you guys take from that what you will, right? I did that on purpose, by the way. But so a couple phases here of deployments, trying to build a cool little moon base. So that's going to be fun, right? At least something to look forward to. $20 billion over the next 7 years. That's going to be fun. But also at the same time, NASA with another release today. Well, here's the rest of their moon base. Sorry, I'm kind of got all slides all over the place here. Phases of the moon base. So lots of parts, lots of equipment will be needing, guys, which is why the space trade, not only for satellites, constellations, various forms of rocket delivery systems, such as Rocket Lab or SpaceX, right, will be very popular. The space trade is definitely in full swing right now and will be as such for probably the next 10 years as we put more and more emphasis on it. Additionally, as well, NASA launching another initiative here. They're launching a nuclear-powered, well, let's just call it for what it is. It's a proper spaceship, not a space shuttle. No, it's going to be a proper spaceship, nuclear-powered spaceship. So we're now finally in Star Wars or Star Trek, called the SR-1 Freedom, launching in 2028, demonstrate nuclear electric propulsion and deliver Skyfall helicopters to Mars. That's going to be very interesting. Those are the little things that you're seeing right now on Mars. So they want to explore this a bit more in detail here. Here you can see what they're trying to do. They're going to map a lot of the Martian continents overall with these nice little helicopters, and how they're going to deliver them. Well, with this one right here, guys, this is super cool, man. It's an actual spaceship, like a real one. It looks pretty nice, right? So there you go. So those are some nice news headlines out of NASA. The reason that I bring it up is because we have been putting a lot of emphasis here on the space trade over the past 2-3 months on the channel. So definitely something to keep looking into as a thematic trade for the next 5-10 years. Moving on a little bit further here, ASML securing its largest disclosed order ever from SK Hynix, buying $8 billion of EUV machines through 2027 to ramp advanced memory chip projections. So this is another piece of news that goes to help the case that memory may be not as cyclical as people had once believed. I'll remind you, the previous cycle in memories was for things like TVs and smartphones and only personal electronic devices, with a little bit of industrial applications here and there, of course. But now you're going through the data center revolution, right? And then in the future, you also have a whole batch of robotics, which will also be needing memory chips too. So keep that in mind. This cycle may last longer than previous cycles, as we do have visibility from SK Hynix and Samsung through about 2030 at this time. And we know that all three of the major memory companies, SK Hynix, Samsung, and Micron, have been locking in 3 to 5 year deals with the hyperscalers in terms of locking in prices right now. So contrary to other times, the cycle may last a little bit longer, which is why we still focus on these names every day, whether it's the Korean producers, SK Hynix and Samsung, or Micron, which everybody loves as well. Moving on a little bit further here, NVIDIA and Microsoft launching a partnership here to accelerate nuclear energy deployment with AI. Very, very, very strong right now. So obviously we know electricity problems are front and center. So a new partnership of NVIDIA and Microsoft, obviously partnering with this company right here, Alo Atomics, for a nuclear collaboration. So that's why we also put a lot of emphasis on nuclear stocks on the channel, and we will do so moving forward because there's just not enough power in the US grid right now to sustain all of these data centers and all the infrastructure projects by large and by far. So nuclear, pay attention to it, guys. It's going to be front and center here, not for this week, not for this month, not for this quarter, for the next few years. And last but not least, this was the reason why the entire software sector today sold off in a massive fashion. Again, another 4.29% down on IGV. You'll notice some companies here, Salesforce down 6, Intuit down 5, ServiceNow down almost 6, Adobe down almost 4, etc., etc., etc. Even Microsoft, Oracle getting dragged down, a whole bunch of companies getting dragged down. Why? Because of Claude. Obviously, the same thing as before, right? So this has been one of the problems I've had with software. Many software companies, not all, but many legacy enterprise resource software companies, right? Is that every single week or every single month, guys, for the rest of your investing careers in these software players, you'll have to deal with news releases like this, right? And that's why a lot of software names, in my opinion, are just not the best place to be investing right now. So essentially, I'll just rewind the video, right? What is it doing? Well, Claude allows you to do everything remotely from your desktop, even if you're not there. Essentially, they're enabling for a synthetic human, right? This is exactly, if I had to sum it up, right? It's basically synthetic humans. If you're not at home, you can send a nice little text message to Claude and say, hey, I forgot my PowerPoint presentation on my computer. Can you send it to my email? And it's just gonna do it. So it has full permissions to your PC. It can do many other things, right? Such as opening your apps, navigating your browser, fills in spreadsheets, anything you do sitting at your desk. Is this AGI? Is it very close? Well, that's one of the reasons why software stocks have been selling off today, because it replaces a lot of the menial tasks that humans would have to do every single day. Claude just keeps getting better and better. And I will once again remind you guys, this is the worst that AI is ever going to be. So keep that in mind when you're making your investment decisions in software. You guys know my tune on software. I'm not investing in ServiceNow or Adobe or CRM or some of the legacy names like that. Dare I say even Intuit. I'm not really touching Intuit now either. But the only names that I would probably be touching that have sold off are Palantir, because at the end of the day, it's Palantir. Microsoft, because at the end of the day, it's Microsoft. I know it sounds simple, but it really is just that simple. And then cybersecurity. I think cybersecurity is the least disruptable aspect of the SaaS platforms, at least the ones that people are often quoted as being, as buying recently, right? You see a lot of videos, a lot of people on Twitter saying, ServiceNow is so cheap, Adobe is so cheap, Salesforce is so cheap. Yeah, but literally like every few weeks, you'll have to contend with another one of these cloud releases. This is the worst that AI is ever going to be. Obviously, many of these companies are implementing AI, but will it be enough? Once again, it's all about seed risk, pricing power risk, and predictability of earnings. Do these companies deserve to go back to trading at 20, 25 times forward price to earnings? Or will they unfortunately be forever locked at between 10 to 15, which is where most of them trade right now? A very good question, isn't it? Wall Street doesn't have the answer, and I don't believe many people have the answer as well. We just don't have enough information as to the ongoing developments of AI. That is everything I had for you guys for the news cycle. Once again, a very big news cycle today again, but hopefully the news cycle helps you contextualize. You know, the only reason I bring up the news cycle here is to inform you guys of key themes that you should be looking into for the future, but also to inform you of either sentiment indexes or statistical measures that we can use, right, to kind of bolster our thesis as to how heavy we should be buying, or should we be buying at all, or should we just panic and absolutely sell everything here in the fears of this war lasting for the next decade. So moving on, let's move into the technical portion of the video and let's get into some charts, shall we? So talking about the good old S&P 500. So we know that the bears are still in control of the charts right now. If you take a look at the nice futures bounce, the price action looks a little bit better, but you still got a long way to go. You still got to redo the daily uptrends, right? So essentially what I'm saying is you're not out of the woods just yet. If today indeed is the higher lows, you got to take out yesterday's high and give me a nice daily uptrend and get back this 200-day EMA and the recent support level right here, 660 down to 653. If they just sell off the news headline again, well, you're taking one step lower and you might just end up in daily oversold conditions as we were on Friday's action, into Friday's action as well. Down here, you'll notice the next line of defense down here for the bulls, 640 down to 633, right? I'm not trying to call the bottom at all. You guys know I never try to do that on the channel. We're just looking day by day on the evolution of the narrative and the evolution of the price action. It allows us to either to be able to determine how much size do we throw at positions, right? Obviously, the best way that I've been trading the markets recently has been selling puts under the market on big days of volatility and on red days. And so far, that's proven to be a very good strategy, right? Benefiting from the volatility, not taking directional bets just yet. Even myself personally, to throw on the size with directional bets, I need to see a recapture of your daily uptrends, which lets us know that the weekly moves lower have halted a little bit and that the bulls are looking to maybe make an attempt to recapture the higher timeframes. And only then will we be able to say that, yes, indeed, we've established some sort of bottom, similar to what you had right here, right? Putting on true size can only have been done in April. End of April last year. You could have made some initial attempts on the, you know, if this is like the ceasefire news right here, right? This was the infamous Trump taco where he basically took the tariffs off almost as soon as he kind of put them on, right? There were some attempts that were being able to make that to be made there. However, to put on true size, you just wait for the weekly uptrends to be recaptured, or at least the daily uptrends. You stand to do a little bit better here because it gives you a nice stop loss area of liquidation, capitulation, maximum fear lows, however you want to call them, right? So keep that in mind. Moving on to the QQQs right now, same concept, right? The bears control these short-term timeframes. You need to get me a bounce above yesterday's high, 595. Then you can say, all right, daily uptrend attempt. We're going to make an attempt to recapture this 200-day EMA and come through this resistance area, which used to be support, and that is between 596 to 590. Give me that. Great. We have a tradable bottom in motion right now, and then we can make an attempt for a recapture of the weekly uptrends as well. Until that time comes, the bears are still in control, and the bulls will have to play defense down here still. If we unwind today's post-market move, we will have to, once again, play some good defense down here, 581 to about 575, right around the 12-month EMA. We've been waiting for this one for a while, right? We know that the best areas to be buying in these markets are between the 12 and 26 EMAs, Don't take it from me. Just go back in all previous bull markets, and that's usually when you get the best possible opportunities in the market. But every time we're into there, they will make you feel like the sky is falling and that you're about to have a 30, 40% market correction, lost decade, 2-year recession, et cetera, et cetera, et cetera, et cetera. But a lot of people, you just have to be cautiously optimistic at all times in the markets because the markets are a lot more resilient than most people anticipate. Moving on to XLF right now. Financials, not too bad of a day, but still a little bit flat, right? Up nicely in the post-market right now by about 1%. So this one too, right? Give me a new daily uptrend, and then we can talk about some local lows being established coming out of daily oversold conditions, support below 48.30 down about 46.91. Financials is decent. We've been talking about this one for a while, right? It's daily oversold conditions, big weekly downtrend right now, heavy private credit narrative against this sector, of course, as well. And this ETF was roughly 14% off the highs. Some phenomenal deals in financials right now, whether it's Visa, whether it's MasterCard, right, at some of their 26 EMAs, which never happens almost, whether it's American Express with a very nice retracement as well, whether it's some of the major banks like JP Morgan or like Bank of America at some decent discounts, very good discounts all over the place in the financials landscape. So please keep that in mind. Moving on to healthcare right now, healthcare with also a little bit of a bounce. This sector too was in daily oversold conditions. So what do you notice? The S&P was in daily oversold conditions, financials, oversold conditions, healthcare, oversold conditions, and many other sectors that we talked about yesterday, right? Staples, oversold conditions, consumer retail, oversold conditions, right? It's like, how many more oversold conditions do you want, right, in the markets to let you know? And the market breadth, the VIX close to 30, market breadth down here. It's just so, I don't want to sound like, I don't know what I would sound like right now, but I don't want to sound sarcastic or things like that, right? But it's just sometimes I don't know. And even gold, like big oversold conditions, right? I don't know how many extra indicators people need to at least nibble a little bit. I'm not talking about full send it, right? But how many more indicators do some people need to actually buy something, right? You have confluence of so many different things, whether it's sentiment surveys, smart money, dumb money, a whole bunch of statistics that I bring up to you guys, right? At least buy something, even if it's $100 worth, right? At least get used to buying something when everybody in the media, right, and the sentiment tells you that you should be scared. You should be doing the opposite. At least try and retrain yourself to buy something. Nobody's saying go extra heavy. We're just saying, are these opportune moments to be buying certain things? The answer is categorically yes across the board most of the time, right? At least if you take a look at all of history. Moving on now to XLV healthcare. So healthcare, clearly big downswing, big downtrend by the bears. Daily oversold conditions below our resistance area right now, 148 down to 145. They need to get the daily uptrend back, and then only then we'll be able to say it's a daily uptrend, and they're reversing the weekly time frame consolidation as well. Coming down a little bit too hot for me, so if I'm looking to participate in healthcare, I need to see a bit of price action repair in terms of being able to put a little bit of size behind these trades. Until that time, simply just a falling knife as we are still into a big phase of monthly consolidation. And moving on to the SMH right now, SMH holding up fairly well, right? It's been very choppy in terms of price action. Line in the sand is down there. You're looking for the re-expansion here of the daily uptrend. Only then can you know, all right, the weekly lows are more likely than being set right now. And you're going for re-expansion towards the highs. If you just get stuck in some form of a sideways movement, it wouldn't be that bad. It would allow for the longer term moving averages to catch up to the price. And in the event that you flush over the next few days, first line of defense right down here is going to be the 12 EMA around 350 on SMH. Usually finding SMH in the context of this big old bull market we've been in for a long time on semiconductors right now has been the key area of interest. So keep that in mind. And moving on to the Russell right now, the Russell also up 0.54% right now. Growth stocks having a pretty decent day. That being said, line in the sand down here, 240, Friday's lows, right? So you're looking for the bulls to convert this into a new daily uptrend and recapture this area of interest right here, 251 down about 245. That's the big area, right? Give me a nice consecutive bounce, reset the price action. Great. We can put on some size and we can establish a stop loss. And then at that point, you'd be looking for a couple different things, weekly uptrend recapture, and also monthly lows being set and looking for some further expansion. I'm not in the Russell myself. However, I am in individual thematic growth names and small cap names, right? That I bring up oftentimes at the end of the videos. That is everything for your index analysis. We covered most of all the other indexes yesterday in the video. The VIX right now sitting in a very cool 27. Still a great time to be selling options in this current market, whether those are covered calls on very profitable positions well above the current market conditions, or selling put options well below current market conditions to lock in some prices and lock in some very juicy premiums on your favorite stocks. Still a very good options selling market right now. Moving on a little bit further here to gold and silver. So gold getting a nice little bounce off the lows, a nice little 1.54% day on Tuesday, and a nice little continuation bounce here in the after hour session out of oversold conditions. But we know the damage has been done, right? Huge daily downswing right into the 200-day EMA. And we know that several things have changed, right? We have never come down and closed below here. And the 26 EMA, this is the first time we've done that since when? Since early 2024. It's been 2 years that we haven't done that. So obviously, you know, something has changed, right? Now the bulls have lost the weekly uptrend. They haven't lost the weekly uptrend in a very, very, very long time. So it's not probably going to be a snapback recovery. They may have to two-step this process. And it all starts with the daily uptrend reversal. So if I'm going to participate on gold again, I need to see at least them establish a new daily uptrend. And then, similar to right here, right? Then we can position with a nice stop loss below these levels. If you're a bit late catching the upswings, always set your stop losses below the levels. But as of right now, the bear's still in too much control. I was saying yesterday as well, right? There is an opportunity for those of you that are very aggressive, put a stop loss right below the lows, and then you're going for the big re-expansion that'll take a while back to the all-time highs. So there's a couple ways to play this metal if you so choose. And silver is the exact same concept. The daily bears are in full control of this chart right now. The more cautious bulls will wait for the daily uptrend confirmation to go for swing trade longs. The more aggressive bulls might have already bought the dip, put a stop loss down below there, and going for the re-expansion of the silver trade overall. That being said, the monthlies haven't been lost. They have been cooled off, though, in a big fashion. You just got to understand, though, that when you have a weekly downtrend like this, something that you haven't had in the last, like, arguably, you know, well, 1 year, it's been 1 year since we lost the weekly uptrend on silver, almost 2 years on gold, right? But when that happens, it means that it's very unlikely that you just do this. You're probably going to do something like this. It's going to be a progressive recovery of these metals trades. So keep that in mind. Oil off of the ceasefire news, getting a big, well, not a massive downswing, but still coming down towards the lows right now. So apparently the velocity of the move higher has stalled right now, especially since yesterday's action on Monday when we got the initial delay of the strike by 5 days on Iran's energy infrastructure, but also the possible terms to a ceasefire arrangement today. We'll see how those negotiations go right now, but oil tapering back a little bit here. Obviously, this is WTI. If you look at Brent, it's a lot higher. If you look at oil prices in the Middle East, in terms of physical delivery, they are a lot higher as well, but this is the one that most people watch across the globe. So as of right now, right, you got two big levels here, line in the sand down there, and then Monday's lows. So keep those in mind, guys. Nobody's saying that oil is just going to plummet back to 50, 60, right? No, but what we are saying is that, are we looking for structural highs to be set and maybe oil just establishing a new price range here, maybe between 70 and 80, or maybe 70 and 85 as we kind of move through this volatile period of time with oil disruptions planned to last for much longer than the conflict stands to last, right? Nobody's doubting that, right? We're just trying to ascertain whether this gets worse before it gets better. And right now it seems to be the opposite, right? It's probably going to get better before it maybe even gets a little bit worse. Moving on to Bitcoin and Ethereum, we're not going to spend much time on these at all because not much is happening, guys. Still a very soft daily uptrend right now. Higher lows are set at about 67,200. I mean, Bitcoin and Ethereum, let's be honest, they're just doing a whole bunch of absolutely nothing, guys. So very tough to position. The money is just not here at all. Weekly downswings, right? The lower highs are very, very, very soft right now. So I just don't see any momentum on crypto. So the only thing we can do on crypto, whether it's Bitcoin or Ethereum, is accumulate for the long-term thesis. But as of right now, I don't really see any short-term swing trades unless you're trying to go for something a bit more aggressive, right? Whether you set the stop loss down below here or this daily higher low right there, you'd be going for the weekly upswing and possibly carrying you into 2,800, but you're going to need a lot more momentum in crypto than it currently has, which is why you should be trading these with a stop loss, right? Because there's always an opportunity for the bears to just slam you down and keep going for the weekly downtrends on Bitcoin and ETH. So long-term, yeah, but upswings, right? You're going to need the broader market in terms of the indexes if you really want to see some good performance in crypto, in my humble opinion. Now, that's it for our overall market rundown. Hopefully you guys enjoyed that. Now let's move into our big tech names. All right, so moving on into good old Apple. So Apple, not too bad of a day. It was roughly flat, about 0.5% in the after hours. Daily bears still in full control of this chart. The bulls are trying to put in a little bit of a reversal effect. I need to wait for better price action confirmation if I want to take any swing trade longs on Apple right now. We just don't have them. We're into support, 255 down about 246. And the weekly is still in a bit of a weekly downtrend, excuse me, as we are still in monthly consolidation. My favorite area for looking for Apple, just for adding shares to the long-term portfolio would be between this 12 and 26 EMA. Usually when we find Apple down here, very decent proposition. The company's looking pretty good in terms of their revenue growth prospects for this year. A lot better, at least, than in the last few years. No swing trades for me on Apple right now, and no additions to any long-term shares. AMD, however, this one, definitely some additions to some long-term shares. The valuation of AMD down here, I'll remind you, very attractive. From the 190s to low 200 levels, it's trading at a 0.82 peg for all of this growth, revenue, and EPS. AMD is left like about 1.5 cycles behind NVIDIA right now, and the bulk of their growth is coming second half of this year, okay? We're not even really started on the company's actual growth curve right now. So please keep that in mind. I know AMD has been a little bit choppy recently, right? With the monthly downtrend and the downswing into the 12-month EMA. And a lot of people are getting impatient with this one. Well, sometimes that's just what it takes, right? You got to let the company ramp into its actual revenue and EPS cycle. And obviously, the markets haven't been very favorable to a lot of large cap tech companies out there. So AMD remains sideways. My favorite way to play this one is with longer duration positions or if we come down, goes to these levels, you guys know me, selling put options down here in the 180 to 170 pocket. Haven't been having a lot of fun making those attempts. Moving down here to Amazon. Amazon also a little bit weak today, 1.38% to the downside. Daily bears in full control of this chart. Need to eventually see a daily uptrend recapture. Then you'll know, all right, we got some of our weekly lows that are set. You might be looking for the weekly uptrend. As of right now, no signs of that. If we do drop one level lower, you're coming down here a little bit below 200, right? 200 down to roughly 190 is the nice little pocket. If you make your move down here, I will be selling some put options in the low 190 region. I think it's a great deal for Amazon right now, even for longer term positions. Around 210, you're seeing about a 1.35 peg, and the business is doing extremely well, especially as they showed us their earnings for AWS. Advertising business, the e-commerce business is doing very well too. So keep all that in mind. Moving on to Google right now. Google down 3.28%. Really no news whatsoever, right? It's just, it was coming. It was always coming. You can't have Google hold up, in the middle of absolutely nowhere where the rest of the entire market is bleeding. So now actually flushing through $300 psychological and breaching down below the key area of structure that the bulls were looking to maintain. The next stop, in my opinion, guys, a very logical 12 EMA backtest. If they get down there, that may be the first time in a very long time that you see me play Google a little bit. As of right now, still a little bit too high for my liking, right? At about 300, we derived that their valuation it's not terrible. It's just not the best deal in the market, right? 1.75 peg and a 26.24 price to earnings, which is still arguably on the cheaper side of Google. However, not one of the best deals in the market. So I've been doing a big job DCing a lot of other positions that have better valuations than Google. But if it does come down here, 270 location for a back test and 20% off the highs, that's where I would be more interested. So no swing trades on Google for me right now. The price action is not conducive to that. And also no long-term buys. Moving on to Meta right now. This is one that I've been DCing into, especially on this recent downswing right here. So the daily bears in full control. Long-term buys, definitely a very big fan. As we know that under 620, where we are right now, right? It's literally, guys, a 24 P ratio and close to a very one peg. If you don't want to buy Meta down here, I don't know when you would actually want to buy Meta. It's in a very nice area of support, 605 down about 550. The way that I'm playing this one, adding to long-term share positions and selling put options below the market, either using the main Meta ticker or METU, the 2x leverage play, but giving myself some good distance below the market to make sure that I'm getting in when this stock is like 25% off the highs all the way through possibly 30% declines through 550 if we do revisit that area. But once again, it's going to take a while to change this price action right now. So short put op, longer term buys for long-term shares and short puts under the market, still my favorite way to play a lot of these Mag 7 names that just do not have good uptrends right now, right? For directional swing trade longs. There will be a time, but not yet. Moving on to Microsoft right now. Microsoft really breaking down. They lost the level, guys. They actually did it. They lost the big area of support, culmination of the 400 down to about 380 area. We lost it. We lost the 200 weekly EMA. How many times has Microsoft lost and closed below, right? Not just temporarily lost, but closed below the 200 weekly EMA. You would have to go back all the way, crazy. You have to go all the way back to 2012. 13 years ago. So this is another ticker, right? If you've been interested in buying Microsoft, now may be a good time for you to look into it, right? So that being said, next area of support down below is about 350 down to about 320. This is my next DCA area. Did a lot of buys down here as it was a very juicy proposition down here as well. I will be buying more. This is also a nice area that I'm going to be selling some short puts into as well, as now the company is down significantly from the all-time highs. 32% all the way down there would be 36%. Has it always been good proposition to buy Microsoft when it's down 30+% from its highs? I do think so, guys. At $390, you know the valuation. It's very low 20s multiples. Good valuation for Microsoft, a 1.28 peg. And I mean, at the end of the day, man, I don't think there's any other way to say it, right? Microsoft is Microsoft. It's not going anywhere. Weekly oversold conditions at the same time. So yes, we can get more short-term weakness, but in my opinion, still one of the best buys in the Mag 7 right now. Moving on to Netflix. Netflix down 2.63%. Still sliding daily downtrend a little bit. If you do go a little bit further, you might go for the full Warner Brothers Discovery gap fill down there, which will be coming back down again to the high 80s, specifically this area right there. 86, down about 82. The bulls have a lot of space right now, just looking for a new weekly higher low for possible further trend continuation. We'll see if the bulls are able to play defense. Netflix coming back to my buy territory again. I did a lot of buying down here, 90 to about 70 for my long term, just average DCAs, right? If you drop down there again, I will resume my buying. If we stay above 90, that's when I kind of stop because I do believe there's good value under 90. At about 90 bucks or lower, you're trading at 28.574 price to earnings and a 1.43 peg. So not the cheapest valuation in the entire market, but I do like Netflix and it is a long-term portfolio holding for me, holding it for arguably the next 5-10 years. That being said, moving into NVIDIA right now. NVIDIA, another one of the best buys in the market, in my humble opinion, at least in terms of just, you know, the thesis is just so clear. Like all roads lead back to NVIDIA. We got improved guidance. Now, I'm sure that some people criticize this company for, well, we may lack visibility beyond 2028. The growth rates may slow down from what they are right now. And this may be true, right? But you're just trading so cheap right now in relation to next year's earnings or even in relation to 2027 EPS, right? If you look right now in terms of an expression of 2026 earnings, you're trading at a forward price to earnings of 21 at 175. Very cheap. But I mean, if you take it out just 1 year further, right? You look at 2027 earnings, how cheap are we trading right now? The 2027 earnings are about 11.12, okay? 11.12. So 175 divided by 11.12. You're trading at 15.7 times 2027 earnings for NVIDIA. So, you know, that is fairly cheap for this business, right? That being said, support stays put down below here, 170 down to about 165. My favorite way of playing this one, accumulation of longer term shares. It's been stuck in this consolidation range for a very long time. Monthly has just been consolidating sideways, doing a good job of cooling off this monthly RSI and possibly preparing for the eventual next leg higher on this trade. So I'm a big fan of building some positions, but whenever we come into these lows, I'm also a big fan of selling some put options below some of these support lows down here, low 160s. Very good opportunity to be selling some put options. At least that's what I'm doing, not financial advice for you guys. You guys are free to do what you want. Moving on to Tesla right now. Decent little pop here on Tesla, 0.57, but we know no price action repair whatsoever. It's been a daily downtrend since December, essentially. Even Tesla, man, down, 24% off their highs. Still very high valuation right now, but they're building Terafab. They're building so many different things, Tesla, obviously, too, right? So unfortunately, not above the support range, or rather resistance currently, because it used to be support. Now it's resistance, 405 down about 380. Next stop to the downside, if we do plunge one level lower, 360 down to 340. Monthly, still in a monthly consolidation phase in this stock. Between the 12 and 26 is where most people that are bullish on Tesla could seek to position right now, as the stock usually has responded well to those levels, except for in the depths of the bear market of 2022 and then the ensuing drama in this stock of 2024. That being said, no positions right now for me on Tesla. If I were looking for some swing trade positions, I'm not opposed to playing them, right? You got to give me some nice price action. Give me some nice daily uptrends right here, recapture the level, and then, all right, great. Then we can play for the longer duration upswings right here. But as of right now, the bulls need to capture the daily uptrend first. On to Palantir. Palantir 3.77% to the downside, being brought down by the rest of the software trade. That being said, the line of the sand levels are still down below here, about 148, right? So the structure is still pretty nice to favor some expansion. We'll see if they can get it done. I mean, take a look here, what the bulls are trying to do, right? They're trying to really use this area. They broke out of it. They're trying to reestablish some short-term price action and continue the breakout. We will see if the software narrative is just too strong and brings down Palantir to the same effect that it brought it down back here during the good old SaaS-pocalypse, or at least phase one of the SaaS-pocalypse. That being said, currently right now, still trying to maintain this daily uptrend, and the weekly bounce is pretty nice. Palantir, what I'm doing on Palantir is when we have some red days, I am not opposed to selling some put options down below here in the mid 130s and adding to a bit of my long position, guys. This is the first time I've added to Palantir in a while, right? back down here when we talked about it post earnings, but also even here, right? The area that I stop adding to Palantir, and for me personally, for the long-term portfolio, is above 160. Above 160, I kind of put the brakes on, but below 160 down to about the 120s is where I have been adding. And that's the first time I've added, guys, in a very long time. You might remember me throughout 2025 was kind of clipping out of shares. Some of my highest sales were like in the 180 range. And I've just been progressively buying back some of those shares at a lower proposition down there. Moving on to SOFI. SOFI also, this chart is just an absolute, well, I'll just say the word. Some of you guys don't want me to say the word, but you guys know what I'm about to say. The chart is just a disaster right now, right? So the daily bears are in full control, grinding down this 12 EMA, private credit headlines, you know, fintech being out of favor right now. It's not just SoFi, it's Robinhood, you know, it's PayPal, it's the banks, it's the credit card company. So like if even Visa and MasterCard can't hold up trends, and it's Visa and MasterCard with their 50% net margins, right? SoFi is not going to do it. Let's be honest, right? So that being said, down here at 16.7, if you move a bit lower, the way that I'm playing SoFi, quite casually, just selling some put options down here in the lower 15 range. Daily bears in full control. You want this to turn around. Give me a daily uptrend. Give me some form of a pop above this 12 EMA. Then, right, the short sellers won't be in control anymore. Then you can get some nice momentum, and then we can play some swing trade longs on SoFi. As of right now, bit of a falling knife, big weekly downtrend, sharp weekly downtrend, almost weekly oversold conditions, and monthly just pulling back into this key area. So if the bulls are going to play defense, they have to play it at this point in time, pretty much right now at 17. For you long-term investors out there that are looking to add some SoFi, is it a good proposition? It's not bad, yeah. At 17.86 on the PEG ratio, 28 forward price to earnings ratio as well, and not too bad in terms of forward price to sales. But is SoFi going to get back up to the all-time highs this year? Doubtful, right? That'll be another 100% move from here. And I just don't know if they're going to get the same momentum as they had last year. But could this be some of the local lows? Yes, but you got to wait for the bulls to show you they want to play ball here if you're going for any swing trade longs. Moving on to Uber right now. Uber also selling off today, 3.7% to the downside. And now this one is going to get interesting, right? So they had the daily uptrend. They now lost it again. And that being said, weekly, unfortunately, just maybe a sequence of lower highs. If they go for the lower lows here, guys, I'll be paying very close attention. Selling puts on Uber down here, 65. Last top 5 options video, the last few weeks, I've been telling you, if you break down there, watch for Uber. Selling puts down here, juicy proposition, but also between the 70 area and 65 location, roughly, great time to be adding some shares. The valuation of the company is quite low. It's just that going for short-term swing trades on these guys, when you're in such big weekly downtrends and monthly consolidation phases, you can't really do it unless you get very nice daily uptrends and then you set stop losses below the lows. That being said, long-term shares, I am a very big fan of playing this company too. And then we move on to our last one of the list, Taiwan Semiconductor. That being said, the company was up about 1.5% today. Not too bad, right? They're trying their best to get some form of an engulfing move going right here and reverse into a nice daily uptrend. The price action on TSM is not the cleanest. I'll be the first to admit that, right? My favorite time frame for TSM usually is just the weekly and the monthly charts. As of right now, the weekly with a decent pullback right here, and the monthly chart as well, some form of a decent pullback. My favorite area for TSM, though, if we somehow make our way back into the 310 to 300 location, that would be an area where I would not mind nibbling a little bit for some shares, but also selling puts under the market too. Could be a very decent proposition. At 340 where they stand right now, valuation is not terrible. Relatively low forward price to earnings at a 24 and a 1.26 peg. So it's not bad. It's not my favorite opportunity in the market. At least, you know, I'm full on TSM shares. I have all that I need. I've built out that position for years. And the last time that I bought some, to be quite frank with you guys, was during the tariff sell-off of last year. I haven't really bought anything since then, and I don't need to buy any because there's so many other great deals in the markets right now, but I'm not selling a single share. Additionally, though, I'm not really going for any short-term swing trades at this point in time in TSM, although you could have an idea of just going for the swing trade lows, right? Putting a stop loss down below there if you're going for some possible expansion, but I think there are just some maybe cleaner setups in the market right now, but nothing wrong with TSM per se, right? Arguably, there is a small little zone of support that they're reacting from right there, which is perfectly logical too. So that being said, that's everything for our Mag 7 names, big tech names, and our overall index breakdown. Hopefully you guys enjoyed that. I'll try to bring you guys more insights as we move along day by day. Futures market right now responding well to those ceasefire news elements that transpired today. And now let's spend about, let's call it a good 10 minutes. 5 would be too disappointing, I know. So let's spend 10 minutes talking about the biggest gainers and losers of the day and whether or not I'm interested in any of these pullbacks. All right, so company number one, what we'll talk about briefly is going to be Circle and then Coinbase as well. So a lot of the crypto names are down today because of the Clarity Act. Essentially what happened today is that because of the details in the Clarity Act, which Brian Armstrong, the CEO of Coinbase, is vehemently against, well, unfortunately, the stablecoins will not be receiving any interest payments from utilizing their networks whatsoever. That being said, the banks will be collecting them. So this is obviously a big disappointment for the crypto community right now. And as a result, Circle has come down 20%. Now, I have a very tiny position in Circle, not a very big position whatsoever. I am still long this company for the long term, meaning like the next few years, but it's not a very big position at all. And I'd be lying to you if I said if it was my favorite company in the entire markets right now. And the same thing can be said about Coinbase, guys. I just don't really play Coinbase. I think if you're going to play a brokerage, you may as well play a more broad brokerage, such as Robinhood, which is also not immune to the fluctuations in crypto right now. And as a matter of fact, Robinhood, I haven't touched Robinhood in a very long time. However, if we can possibly see, by the way, Robinhood just authorized a $1.5 billion share buyback. If I can see Robinhood with like a 60 handle or a 50 handle, this will be the first time in a very long time that I've played Robinhood. So I'm not really interested in Coinbase just to have some pure exposure to a crypto broker whatsoever. Circle, I do have a little bit of. And if I'm playing Bitcoin or if I'm playing crypto, I'd rather just play Bitcoin, right? I'm not going to use Coinbase as a proxy. I'd rather just play Coinbase itself or just go with a more broad brokerage like Hood or maybe even something like an Interactive Brokers, right? Interactive Brokers, arguably the best stock that's held up the best through this entire financials sell-off right now. That being said, we can move on to perhaps some different names. Axon. Axon's a company that I don't have in my long-term portfolio, but I did say after their earnings, if ever we were to refill this gap, I would be interested. So Axon, probably going to start a position soon. I like this one in the lower 400 range. We covered their earnings. Well, we covered their earnings a little bit after they released them. Right now, at around the 430 region, it's not that bad. It's still a little bit expensive, but you're buying this one for the ecosystem overall, coming very close to its 200 weekly moving average. This will be a kind of a position that I build and scale into, and I'm willing to hold for the next 3-5 years for the expansion of their overall ecosystem. Fundamentals on this company are very strong. They have great growth ahead of them in terms of EPS consistency and revenue consistency as well. And that's really why I'm buying it on this big discount here from the all-time highs, about 48% off at this current time, right? Speaking about some of the, I guess I can identify a few of the names that were down the most today, right? Like a lot of the cybersecurity names, right? So cybersecurity has been selling off with a lot of the SaaS names down here. The strongest ones arguably are still CrowdStrike. Pay attention to CrowdStrike, how they react to this area, 375, and also Palo Alto Networks, another one of the strongest names in the entire business right now. Pay attention if they do come back down there, sub 150. Not terrible propositions for individual names, but my favorite way of playing, I don't own any cybersecurity names directly in terms of like for the long-term portfolio, but I do own a cybersecurity ETF. I don't own this one. I own WCBR, and unfortunately, it hasn't really done very well over the course of the past 6 months. But cybersecurity is a position that I'm adding to here, just because I do believe that in the context of the broad SaaS sell-off, this stands to be the industry that will be the most resilient. So if you are also looking for some SaaS names, right, cybersecurity might be something that you're willing to look into because the addressable market is only going to get larger and larger as we do more AI over the course of time. So I do really like some of these cybersecurity ETFs, although they have been out of favor recently, still an industry with a lot of growth ahead of it, and definitely not something that you can just, that Claude can basically just do away with right now, right? Institutions will still need a lot of cybersecurity moving forward. Moving into maybe some of the other names. So some of the drone names right down here, right? Like KTOS. KTOS for me, I'll be very interested if we can somehow find our way back down here into 70. I started building a very small position on KTOS down here in the low 80 range. I will be adding to this position. I will have a few drone names that I'm looking to keep over the next few years. This one I have. AVAV I have as well, despite the price action not being very good. I'm just accumulating these for the long term, right? They're kind of like mid-cap companies. AVAV is like a $10 billion company right now. KTOS is worth a little bit more. Okay, I have a little bit of Ondas as well. So some of these drone companies, I am specifically looking to build more of a position into here as time kind of moves on, because it's a multi-year theme right now. So taking advantage of some of these discounts on a lot of these drone companies is something for you guys to look into as well. Moving on a little bit further, I mean, I guess we can talk about CLH. Maybe some people want me to talk about this one. Costco coming out with their own brand of energy drinks, their Kirkland Signature energy drinks. And as a result, CLH has kind of come down. It's down a lot from their earnings, right? Down 38% from that big earnings pop up here to 58. I don't own CLH. There was a time in the past where I used to trade this one, quite frequently, right? But I haven't really traded much consumer discretionary recently because consumer discretionary is just tough right now, right? Whether it's this one or the food company. I mean, other than McDonald's, right? McDonald's is just still very strong here, near the all-time highs. But a lot of the companies, right, like Kava or Kava's actually not done too poorly, as a matter of fact. Kava or Chipotle or, Dutch Bros, like a lot of the popular names out there, right? Consumer discretionary has just been relatively tough, guys. Still a relatively tough trade to kind of get behind. This one and even some of the consumer staples as you continue battling with the inflation narrative, higher interest rates for longer, et cetera, et cetera. There will be a time where you will possibly see me play a consumer discretionary a bit more aggressively, but that time has not come for me just yet. FICO down another 6%. Now FICO under into the three triple digit territory, right? 995 on the price. It's been a very long time coming. And I've described this one over the course of the past few days. Why the sell-off is occurring right now, it's because of their continuous battle, them, Equifax, and TransUnion, right? So FICO used to have almost exclusivity in terms of being the credit score that was used by a lot of mortgage lenders. That has now, and they benefited from tremendous pricing power. And arguably, they increased their prices too fast, which brought some scrutiny to the company, right? That being said, right now, FICO, is it a buy? It's like I was saying the past 2 days, right? It's only a buy if you plan to DCA this one over time and you have a very long-term time horizon. Nobody's doubting the free cash flows of this company. However, it does still trade, even now at 995. It trades still quite expensive. It doesn't trade at 15 times forward earnings, 20 times forward earnings. It trades still like high 20s forward price earnings, right? Nobody's doubting the company has great margins. People are doubting the fact that this used to be a company with exclusivity of pricing power, okay? And now they have to share with the Vantage score, which is something that Equifax puts out and TransUnion uses as well. Those companies haven't been doing well either. FICO is not one that I'm buying personally. I'm busy buying many other companies in the market, but if you do own FICO or if you're looking to buy it, there's nothing really fundamentally wrong with this company. It's just that the turnaround story for this company, it's going to take a long time, right? And it is into weekly oversold conditions, which never really happens on this business in this very, very big extended period of time of consolidation. So arguably, this is just normalization, right? It probably should not have gone all the way up to $2,400 to begin with. So now you're just kind of seeing a normalization of those prices, a much more attractive opportunity than it ever was, in my humble opinion. CRM, ServiceNow, if you guys don't already know, CRM, ServiceNow, Adobe, Monday.com, Team, a lot of these enterprise resource software players, I'm just not touching at all, guys. I think there's many more clear opportunities in the market right now. Arguably, some of the only software names that I'm buying right now, Microsoft, Palantir, a little bit of cybersecurity through the form of an ETF. And the names that are coming down with cybersecurity, I am playing just because their moats are just too strong. SPGI and Moody's, I do own my long-term portfolios. I'll DCA those with the paychecks, just nibbles, right, at these very nice valuations. And some other ones that have come down as well as a result of the most recent sell-offs, such as, where was it? Shopify. Shopify is one of my newer positions in my long-term portfolio. I'm going to keep building a position. As long as we're close to the low 100s, this is where I do indeed enjoy buying some Shopify for the long-term portfolio. I think that's most of everything that was down today. I mean, we can't cover everything. We've covered a lot of the stuff in previous videos as well. You guys know I have some new holdings. I'll be increasing my position 14 to 13, decent monthly pullbacks there and a decent valuation as well and decent forward estimates. And also Mercado Libre. Mercado Libre has been wildly out of favor recently, wildly out of favor. I started clipping into this one again, 2000, and I have been buying every single paycheck since, just buying some of these dips. No swing trades on Palantir for now. On Melly for now, just accumulating some long-term shares for the long-term portfolio. Phenomenal growth metrics ahead of the company right now. Phenomenal valuation below 1800. So I will keep buying as long as this valuation continues to be extremely attractive like right now. Some of the space trades I'm also going to be layering into. Rocket Lab, I will start playing some short puts under the 60 range if I can. Trying to get this one down in the 50s if it comes down there. I think it'll be a very nice sell-off here. Trying to establish, a bit of a back test here on the 12-monthly EMA. So Rocket Lab, I'm definitely interested into. Planet Labs, another one that I've also closely been looking into since they keep just absolutely destroying earnings recently as well. If ever you get the backfill here, you'll probably find me taking a position on the small cap company. Haven't really talked about it before on the channel. There's many space companies that I don't often talk about on the channel, but that we do cover regularly in our Discord group. You guys probably know exactly which ones I'm talking about as well. So, I mean, just flipping through the list, those are just the ones that kind of jump out to me right now. Booking.com is another software company that I'm buying right now. I think the mode is just too strong. I use them all the time. Phenomenal product, and they'll be having a nice little stock split soon. And the valuation down here under 4,300 is extremely cheap right now, extremely cheap. And I mean, the agentic AI companies have already told us that they're not going to be the checkout agent of record. They'll help people plan their trips, but you won't book trips on ChatGPT and or on Anthropic or Gemini. They just don't want to do it. They do not want to be the agent of record. They don't want to deal with the customer service. They don't want to deal with any refunds or whatnot, but they will help you funnel you to the end checkout locations such as Booking.com and Expedia. So the market's funny with this one, right? It's saying that these companies will be disrupted, but the same companies that are supposed to disrupt these companies are saying they're not going to do the checkout services. So the fees will still come back to Booking.com, which is hilarious, right? So some of these discrepancies you do have to pay attention to, and it does give you a good signal to be a buyer. Special shout out to Micron as well. Some of the names here on the memory trade, right? Micron coming to its 50-day EMA. Be very curious to see how it reacts down here, because Micron hasn't really lost this 50 EMA in a very long time, guys, since arguably the month of August. We haven't lost this level, so this one is very close. This is a very good one to pay attention to. SanDisk is holding up a little bit better. Beautiful pop here and holding above the previous highs, right? So beautiful breakout retest trade availability on SanDisk right there. And even EWI, right? We talked about this one yesterday. Clear line of defense right here for the bulls. Also, 50-day EMA touch on the South Korea ETF, which hasn't really lost it since tariffs of last April. So it's been a while, right? So they're giving you clearly defined stop loss locations down there. Weekly also in a phase of consolidation right now. So we'll see what happens. But Samsung and SK Hynix, man, you can't count them out. I think they'll have some very good years ahead of them as well. And EWI has like 46% of this entire ETF in those names. So if you don't have interactive brokers and you cannot buy SK Hynix or Samsung directly, well, EWI would be your closest proxy. That being said, let's move into some of the names that keep printing highs. AAOI, such a strong move here. Recapture the daily uptrend, looking very good. Next upside expansion targets, obviously the all-time highs. Company currently stands at about 8.57 billion. Is it too late? If you only look at this chart and you might say, well, I can't buy this one up here. Well, because you're not buying it for the right reasons, right? You're buying it on price alone, on the chart alone, but you're not buying it for the market cap expansion, right? So they have a lot of market cap expansion here into the end of 2027 and 2028. Look at these 4 revenue estimates, right? That's why this stock is kind of unstoppable right now. If you compare it to Light, right? And there's nothing wrong with Light. Super strong company, obviously, as well in the photonic space. It's a $57 billion company. And this one also has roughly the same exit rate as AAOI in terms of revenues, end of 2027 to 2028, like 5-6 billion, right? So you have one company here trading at 50 billion, 10 times sales. You have another company here trading at roughly 2 times for 2027, 2028 sales as well. So that's why this company is running a lot harder than some of the other names in photonics, but photonics is all the rage right now. Fabrinet printing the highs, Corning printing the highs. They're giving you very, very, very clear stop loss levels, resetting the daily uptrends, very nice expansion levels right there. Coherent, same concept, right? Trying to reestablish the trends. Very nice. These charts are super, super, super smooth. So this is what I'm saying, right? For the traders out there, I'm not going to help you guys price out every single trade. I can only do so much. But if you're trading the markets right now, okay, instead of buying things in perpetual downtrends and trying to pick bottoms, you may as well focus on the trades and the segments of the market that are working, that are providing you very clear weekly uptrends, daily uptrends, giving you very clear defined stop loss levels, and just going for the expansion trades across most of them, right? So keep that in mind. Energy storage trades, battery energy storage, and other forms of storage, very popular as well. FLNC is one, ENS is another one, arguably your market leader. Look at this price action structure, right? We talked about it on the channel last week. Very nice stage of expansion right now, recapturing the moving averages, and the weekly uptrend looks like this, right? So if you're trading the markets, you may love this stuff. If you're a long-term investor, you may ask yourself, I can't possibly buy them up here. If that is something that you are saying right now, just please, 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 for a lot of these companies, have a look at the market cap versus future sales, right? 6.53 billion is ENS's market cap right now. If you take a look at forward sales, What are they trading at? Are they trading at 10 times sales? No, they're trading at not even 2 times sales, right? So it lets you know that, can we have some expansion in terms of the multiple here? You can. If the trend looks good and you can have some multiple expansion, well, maybe the bias is still to the upside for a lot of some of these players, right? So please keep that in mind when you're doing your analysis. Bloom Energy, very strong, defending our support level again here today. 142 down to 126, my favorite way of playing this one. Yesterday, upon the big decline, I was selling put options, guys, down here. This was a top 5 options play, right? So very strong names. If they have some declines, I'm looking to play them. Very strong weekly support area as well. Bloom Energy, holding a lot of the trends that they've established so far as well, not losing much of the price action there either. And Marvell, you remember we were talking about Marvell down here for some leap call contracts or some nice positionings, approaching its resistance area right now. And Marvell is another one, right? This is an $80 billion company, okay? But it's not trading that expensive. $80 billion company. Where are they trading? Well, look at this massive growth ramp, right? Massive revenue growth ramp about to be underway. And EPS, look at this monstrous increase in EPS as well. So Marvell, right? Pay attention to this one, guys. I mean, we redid the valuation at about 83, where it was right after that little bit of an earnings slide, trying to play the pullbacks right here. Not trading that expensive. Forward price to earnings, 23, and a 0.78 peg with a 7.1 forward price to sales. That's not very expensive for the semiconductor landscape right now. I think that's everything, guys. I mean, we'll talk about more things as we kind of move along, but you guys probably know the key themes that we want to focus on right now. Data center connectivity, whether that's photonics, liquid cooling, or anything outside the data center, such as energy, right? Whether those are the pure form energy plays like Bloom Energy, GEV for the gas turbines, FTAI. I'll share a bunch of companies, right, that you probably maybe don't even look at. FTAI, you know, the battery energy storages, and other players such as the utilities providers like Vistra or Next Era Energy, or some of the nuclear plays. I'll let you guys break down the ETFs on your own, but nuclear and UKZ, URA, some of these ETFs, look into them, look into the best players, right? No need to only play Constellation and CCJ. There is many other names that you can play as well. Some of the smaller ones like LEU or UEC, things of that nature, right? So the Discord members know how we're positioning across most of these sectors. And I'll try to share as much as possible on the YouTube, but obviously much more inside our trading and investing community. And I'm not trying to paywall things. I'm just saying I can go way more into detail in a lot of these themes, whether it's military, robotics, right? Drones, energy, data center connectivity. We do so much of that inside our group on a daily basis. So if you're looking to join us, you're tired of trading and investing in the markets all by yourself, and you want to do so as part of a group that focuses on not only trading the markets every day, doing a lot of wheel trades, right? Selling puts under the market, but also focusing on small and mid cap, very thematic plays for the foreseeable future. All of these plays that we're buying now, we're keeping for a long time, and there's some pretty big expansion if the thesis does play out on a lot of those plays, you know, leap call options, things of that nature, long-term portfolio buys. So all of that, guys, we do live streams Monday to Friday as well, right? For about 2-3 hours at the open. I stream live. We also take all your questions on your stocks, your options, your long-term portfolio. So that's the best place to interact with me, interact with the group, get a sense of what we're looking at in terms of forward plays, especially in this market environment. If you're confused and everything is just going down on a perpetual basis and the media narratives are just getting to you right now, if you wanted to lock in, take things at a higher level, let's just say, right? Just get a bit more sophisticated with the themes, the narratives, and whatnot. Feel free to join us, man. The link to join our group is down below in the video description. Hopefully I get to see a few more of you guys down below in our group in short order. And if not, I guess I'll see you guys right back here on the channel. But that is it for me today. Hopefully you guys enjoyed it. If you did enjoy it, you guys know the drill. Drop me a like, subscribe to the channel to see more of these videos. And if you have any questions, leave them down below in the comment section. I'll get back to you guys as soon as possible. Take care. Have a good day in the markets. I'll see you tomorrow after the close. Peace.